Disclaimer: I am not a financial advisor. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly volatile and risky. Always do your own research and consult with a qualified financial professional before making any investment decisions. Remember, the crypto market is a wild west, and past performance is not indicative of future results. We're talking about integrations, market movements, and a credibility surge that few saw coming. Alright, fellow crypto enthusiasts and blockchain pioneers, let's break this down. The core vision of SEI Network is elegantly simple yet profoundly ambitious. Markets move faster. This isn't just a marketing slogan, it's the fundamental architecture of their entire chain. Unlike general-purpose blockchains that try to be everything to everyone, SEI is hyper-specialized. It's built from the ground up to optimize for one thing: trading. Think about it. Decentralized exchanges, NFT marketplaces, gaming economies, they all demand speed, ultra-low latency, and efficient order execution. SEI was engineered to deliver precisely that. Now let's talk about the colossal news that's been rippling through the market, a development so significant it cannot be overstated. We're talking about the convergence of two absolute giants in the blockchain space, choosing SEI as their next crucial frontier. First up, Chainlink. When we discuss decentralized oracles and blockchain data infrastructure, Chainlink isn't just a leader, it is the standard. They've secured over $20 trillion in transaction value to date. Let that number sink in. That's more than the GDP of many major global economies. This isn't just trust, it's battle-tested security and unwavering reliability at an institutional scale. And now that same trust layer, that same robust infrastructure, is being extended to SEI Network. This is the integration of institutional-grade security into a high-performance trading blockchain. The implications are profound for enterprise blockchain solutions and scalable DeFi. But that's only half the story. Simultaneously, we're seeing the arrival of native USDC on SEI. For those unfamiliar, USDC, issued by Circle, is the undisputed leader in regulated stablecoin, stable, compliant, and backed one by highly liquid reserves. Its native integration means it will be truly on SEI, not just wrapped or bridged through less efficient means. This is enabled by Chainlink CCIP, Cross-Chain Interoperability Protocol, and Circle's CCTP, Cross-Chain Transfer Protocol. Why is this so monumental? Because it makes USDC on SEI not just secure and fast, but also programmable across chains. Imagine capital flowing seamlessly, instantly, and with minimal friction between SEI and other major blockchains like Ethereum, Arbitrum, Solana, and more. This elevates SEI's position significantly within the competitive Layer 1 blockchain space. In the past 30 days alone, we've witnessed an astounding 85% surge in SEI's price. Let me reiterate. 85% in a single month. This is not just a modest rally, this is a powerful, almost vertical ascent that has captured the attention of every serious crypto investor and market analyst. And while many established chains are still recovering, SEI has not only bounced back but has charged past its previous highs, effortlessly crossing a staggering $2 billion market cap. This isn't just retail frenzy, this is the unmistakable signature of significant capital inflows, suggesting a shift from speculative trading to more fundamental value-driven investment in a high-growth blockchain. But the catalysts just keep coming. We're seeing active addresses on SEI pushing new all-time highs, up over 13% in the last month. This metric is crucial because it indicates genuine network utilization and organic user growth, not just transient speculative interest. People are actually using SEI for its intended purpose. And get this. Next week we're expecting these numbers to jump even further with the highly anticipated news of the Japanese Financial Services Agency, JFSA, approving the listing of $SEI on Japanese exchanges. Japan, known for its rigorous and often conservative regulatory environment, approving a token for listing is a colossal vote of confidence. It signifies that SEI meets stringent compliance standards and is ready for a highly discerning, developed market. This is a massive boost for global adoption and regulatory legitimacy within the digital asset industry. However, this explosive growth brings us to a critical juncture, a point where technical analysis becomes paramount. While the bullish narrative is undeniable, we must acknowledge the immediate challenges. At the time I'm recording this, SEI USDT is trading around $0.335, but right above us, a formidable hurdle awaits. The 34 cents to $0.365 resistance zone. This is not a casual resistance. This is a battlefield where buyers and sellers will clash. and the outcome will dictate the next major move for SEI. Let's rewind for a moment. Earlier in 2025, SEI spent months in the doldrums, trending relentlessly lower. From January to April, the price languished, carving out a painful rounded base in the 14 cents to 17 cents range. Many lost hope, many capitulated. But then, in mid-April, the tide began to turn. We started observing the classic signs of a trend reversal: consistent higher highs and higher lows. This pattern, for those of us who study charts, is a powerful signal that market sentiment is flipping and momentum is shifting decisively in favor of the bulls. A clear rising trend line drawn from that April low and connected through June provides unequivocal evidence of this upward structure. This line, currently sitting near 22 cents, has repeatedly acted as a dynamic support level, a concrete indication that buyers are eagerly stepping in to defend these price points. The early June breakout above 26 cents was the definitive break of structure, BOS, a technical term for when a prevailing trend is decisively reversed. Crucially, that 26 cents level was retested and it held firm. This is often the strongest confirmation that a new, powerful uptrend is indeed gaining strength and has solid foundations. Below that, our rock-solid long-term support remains the 15 cents, 17 cents zone, a level that successfully held through the depths of March and April. Closer to the current price, we have robust secondary support around 29 cents, 30 cents. This zone is particularly strong because it aligns perfectly with the rising 50-day simple moving average, which is now visibly curving upwards. As long as SEI's price remains above this pivotal 50-day MA, the overwhelming momentum, the bullish trend, unequivocally belongs to the buyers. So what does this all mean for your investment strategy? What's the ultimate payoff for understanding these intricate market dynamics and groundbreaking technological advancements? This isn't just about catching a short-term pump. We are witnessing the maturation of a purpose-built blockchain infrastructure that is attracting not just individual traders, but potentially the very fabric of global finance. The integration with Chainlink for secure Oracle services and cross-chain messaging, coupled with the direct flow of native USDC, fundamentally elevates SEI Network's position. This isn't merely increasing volume, it's about building unparalleled credibility and showcasing institutional readiness. This unlocks a new frontier of complex, capital-efficient stablecoin strategies and enables the deployment of sophisticated institutional DeFi protocols. Imagine large-scale funds, traditional banks, and major corporations leveraging SEI for lightning-fast, secure, and compliant asset transfers and derivatives trading. This is the future of seamless liquidity design on a blockchain, a future where friction is minimized and efficiency is maximized. This is the long-term vision, the kind of foundational development that can propel a network into the ranks of multi-billion, perhaps even $100 billion blockchains. All eyes, and I mean all eyes, are now fixated on that 34 cents to $0.365 resistance zone. A decisive daily close above this critical threshold would signal a powerful breakout, potentially unleashing the next parabolic leg of this rally. We could swiftly see a move towards 40 cents, and then a retest of the year's current high at $0.425. And honestly, given the sheer force of these recent catalysts and the underlying technological advancements, I wouldn't be surprised to see SEI pushing into new all-time highs in the not-too-distant future. The momentum is undeniable, and the path of least resistance is firmly to the upside. We're talking about potential price discovery for a high-performance Layer 1 ecosystem. Now, a word of caution, because in the volatile world of digital assets, nothing is guaranteed. While the bullish indicators are overwhelmingly strong, smart investors always manage risk. Keep a close watch on these levels. If SEI's price loses the 29 cents mark, that could be the initial whisper of momentum fading. A break below 26 cents would bring us back to a neutral, more uncertain territory. And should the price unfortunately slip beneath that rising trend line near 22 cents, then the bulls could find themselves in serious trouble and sellers might start to regain control. These are the lines in the sand for short to mid-term price action. But for now, the overwhelming narrative, the fundamental drivers, and the technical indicators all point to one thing: up. SEI Network is not just a cryptocurrency, it's a meticulously crafted piece of blockchain infrastructure that is quickly becoming a magnet for serious capital and groundbreaking applications. Its mission to make markets move faster is no longer just a vision, it's becoming a reality. The pieces are falling into place, the integrations are live, and the market is responding.